Test. What? All right, guys. Let's allow the stream to kind of populate. It's a little bit late. I totally understand. I kind of had a little bit of some errands to run at the moment. Hopefully the audio is clear enough. So kind of sit back, relax. If it's a little bit late, you can always watch this later in my video list somewhere. But I think this is one of those episodes where most people are trying their best to kind of take care of their health at the moment, and at the same time kind of secure their jobs. So but in the near future, the interest rate environment is going to change drastically, meaning to say that anyone who is a saver is not going to benefit from this environment. Anyone who does not have the skill sets or the knowledge to know where to park their money is definitely going to be shortchanged drastically, because the banks are probably going to pay you nothing. In fact, they are going to probably charge you for putting your money with them, because they are going to be keeping it safe on your behalf. Now, what do I do if I'm someone who is having $100,000 or $1 million? Where do I put that money? What do I do? Is there any kind of asset class that I can safely put it in? Right now, is property the right time to buy? I don't think so. Is it the right time to enter stocks? Definitely not. Do I buy corporate bonds? Do I buy government bonds? Nope. So all these things are now crashing down around me. At the same time, I don't know whether my job is safe. What do I do? So in this episode, I'm going to really cover that aspect. And I'm just going to come from the perspective of both as a investor. At the same time, I'm going to come across as an ex-banker trying to put this out to my clients in the event that they're coming to me. Now, a little bit about myself. If you are new to my channel and you've never watched my content before, I used to be a banker back in the 08-09 days, right? I started my career, yes, literally during the subprime, where everything was just falling apart. So I'm pretty familiar with crisis, right? I was literally working at a time, trying to calm the nerves of my clients. Obviously, a lot of my clients either entered into mutual funds or, in the case of in Singapore, you call it unit trust, right? Where they were buying aggressively using their central provident funds to buy into unit trust in China, right? And we all know that story where the whole economy tanked. They lost literally 70% of of its value. Of, say, if you put $10,000 inside, you lost 70% across a period of 1 to 2 months, which is pretty much happening right now. Especially those who have trusted their financial advisors at the time, and their financial advisors were not savvy enough to kind of pull their money out of the market and say, hey, you know what, the market situation is currently very bad. So it takes a certain level of skill, guys. I'm not saying all financial advisors are like that, but majority of the time, don't forget that your financial advisor, if you have one, at the end of the day, they have a family to feed. At the same time, they work on commissions. Obviously, they have a basic salary and they have commissions. So at the end of the day, they will still have to sell you something to make you money. But a good financial advisor would definitely kind of watch the market very closely and not just focus on acquisition of clients and not just give you updates when they want to sell you something. A great financial advisor will always keep you updated on a quarterly basis to even semi-annual basis, and they understand your risk profile. So if you're totally new to this, you have never spoken to any financial advisor, you kind of don't trust any kind of bank stocks, you don't trust any kind of any person from the bank other than the cash teller, who is very nice and allows you to withdraw your money on a weekly basis so that you can buy groceries and pay for your bills. It's kind of it's kind of those situations where you gotta start finding that person, or you can get savvy yourself. So in this episode, we are going to be covering that. So first and foremost, this channel is going to be it's a channel where I put out my whole experience, my wisdom, whatever you want to call it, right? And I'm just going to value add to you, right? Because I was working in the financial industry for 5.5 years. No, wait, 6.5 years, right? So I left and have been working from home ever since. So you can say that I practically was on my own since 2015. Okay, and I clearly know that the situation is really bad right now because my whole channel was created to help people get financially free. Now, the question is, how does one become financially free if I'm concerned about my job security? So I think job security is one of the most important things. It's the lifeblood. If we don't have our paycheck on a month-to-month basis, and if we don't have our finances in order, we have credit card debt that we still have to deal with. Not only that, we have a rental, we have a mortgage to pay, we have a car loan to pay. The situation is going to be bad for people who have over leveraged themselves and they could not build more than one source of income. The situation is very real. But let's cover one thing at a time and let's solve each one in a very systematic way. So right now, I think job security is very important. I think you have to really focus on making sure that you are going to be able to be of value to your company, at least during this period of time. That means you will have to really hustle and produce great work even though you're on quarantine. That means you be the best version of yourself. No more slacking off. You stick to the schedule and you know exactly what your boss, your superior, your clients want. You deliver value. Just like how I started this channel. I started this channel by purely giving pure value. Nothing but the best. And I don't expect anything in return. This is what you kind of have to work at. You no longer think about, I'm only getting paid this amount. This job is out of my job scope. If you keep thinking like that, you will be very, very quickly replaced. Okay? Because right now, there are more people getting retrenched. There are companies that are restructuring. Alright? This is not fear, guys. This is real shit. If you don't understand and you're still ignorant, you still think that, everything is all hunky-dory, look outside. People are going to be losing their jobs. Not only that, they're going to be losing their houses. They are no longer going to be able to live like the Joneses, as they say. So, firstly, secure your job first. Provide value for your company, your clients. Show that you want to stay. Show that you really are someone capable and you're able to work during hard times. You're going to push the envelope and you're going to work harder than ever before. I'm not fucking kidding. Now, since that is taken care of and we assume that is taken care of, let's move on to the next step. Right now, if we're going to be in a negative interest rate environment, what do we do? Where do we park our money? What do we start looking out for? Let's assume that your job is secure already because I can't help you with your job. You need to be the one that settles your own job security, right? So now if that is taken care of, what next? I think before we start looking at investments, I think the financial management of the household is very, very important, guys. So for example, if you're a single man, obviously if you have credit card debt, you try your best to settle it as quickly as possible during this period of time. As quickly as possible. Don't let it snowball. Don't sleep on it. You've already been sleeping on it for God knows how many years already. Alright? Try to clear that as quickly as possible because we do not know what will happen in the near future. Now, if you don't have a credit card debt, great. Then there is the rental and your miscellaneous spending, your utilities, so on and so forth. I think I don't have to really go much into that. Just make sure that you keep it on the minimal. Buy what you need. Go out when you're supposed to because you need to restock, resupply. Stop thinking about traveling, events, and all that shit, that unnecessary stuff that could potentially put you in a shitty spot. For example, by you exposing yourself to other people, you could easily catch the coronavirus, right? You don't want to be like that. I think there are now videos trending out there that are people who are below 40, right, who are even in their mid-30s that are in the ICU and having difficulties of breathing. And we're talking about people who are healthy, We're not talking about people who have pre-chronic illnesses or any existing ailments. Take care of your health, guys. Take care of your health. This is the real stuff. I have not really stepped out of my home other than going to pick my kids from school. There is little contact. It's just one teacher and the kid, right? For now, Singapore still has schools going on. I guess they can't really stop everything at the moment. There is already the closure of bars, clubs. I think that's fantastic. Hopefully there will be, look, it's not that I'm hoping for all this to happen, but I think we have to minimize the social, all the gatherings or the potential places that we can gather. It's unfortunate, yes. It's very bad for business, yes. But I think we have to keep this coronavirus in check. So that's one thing. Now the next thing, once that has been ascertained, right, you have already put your financial situation in check. You have already managed it. Your rental, your miscellaneous spending, all these things have to be sorted out and make sure that it's within budget and make sure you have a cash surplus. Now, once you have that cash surplus, right, that's when you can start thinking and start looking, because the next 6, 12, 18 months is very, very crucial. Okay, it's very, very crucial. If you still have surplus cash, you have, okay, so this part, right? So if the first two things, stage 1, stage 2, are not taken care of, you might want to still listen to the rest of this episode, but unfortunately, you may not be able to participate, because in reality, whatever that I'm going to be sharing with you carries a certain level of risk. No matter what, there is a certain level of risk. So you want to make sure that you identify these things. Now, take note, whatever I'm sharing with you is non-financial advice. If you need to speak to someone about this, speak to a licensed financial advisor. I am a nobody. I am someone who just wears a t-shirt. I'm just sharing this with you because I used to have that experience. I used to have that license. And if I had clients to this very day, what will I be recommending them today? So for now, for the next 3 months, I'm definitely asking them not to touch anything. Hold cash, make sure they keep themselves healthy, make sure they have a lot of vitamin C, make sure they take care of their family members, and that's all. That will be all I'll be doing for the next 3 months. That's me, right? But when we see the next 2 quarters of earnings coming out from the stock market, where I know that majority of companies from real estate, okay, we're talking about real estate, commercial, industrial, retail, all will most likely be smashed big time. F&B will be down for sure. Airlines will be down for sure. Banks will probably also have a poor, shitty revenue because firstly, when banks want to earn money, you're looking at the whole lending market, okay? I, as a bank, need to lend out my money that is sitting with me. If people are either defaulting or the interest rate environment is low, which is why the negative interest rate, naturally I'll be collecting less payments. In turn, I will also not be able to generate as much revenue. Obviously, investments are going to be down because most banks do not carry a short or allows our clients to short the market. Very rarely. You high net worth clients probably have the ability to buy put options or very different straddled structured products that allow you to capitalize on the downward market trend, or they call them bear notes or structured bear straddling or whatever. Okay, let's not get into that. Let's not confuse people. So that is that. Okay, but for the retail investors, majority of the time it is a bull owning scenario that clients get to make money. But if you're someone who has never invested before, you don't even know what is a mutual fund, you don't even know what is a structured deposit, then listen up. Maybe this is something that you want to get interested in. Maybe you could start getting interested and start looking at it on your own. I really wouldn't know, but perhaps this is going to be of value to you. So, what happens in a negative interest rate environment? Firstly, very simple. The economy is going to be smashed for probably the whole year to 2 years to maybe even 3 years before it starts recovering. Oil is big time down. It's great for consumers, but it's literally going to be bad overall for everyone else, okay? Firstly, I would say that you are going to be in a spot. First, if you're going to be borrowing, right? Okay, so if you're borrowing, okay, you're now having a mortgage. There are certain countries that are very kind that they're allowing mortgages to be held back. You don't have to pay for it at the time being because of the whole COVID pandemic. Okay, that's kind of good. But in the event that you are, but in sorry, excuse me, but in the event that you do not have this benefit, what happens? Okay, so you're gonna see for the fact that okay, you may have reduced interest rates, so that because the banks are also concerned that you might default on your mortgage, guys. If too many people are defaulting on their mortgage and losing their homes, there's gonna be an oversupply of homes that the banks have to liquidate. Don't forget, the banks own your home as long as you have a mortgage. Okay? So for now, that is the situation. Obviously, if you have more than one home and both are paying mortgage, now obviously, hopefully you rented out one and you're staying in one, and the one that has been rented out, you hope and pray that the tenant doesn't disappear, doesn't go to somewhere else. You would have to make some sacrifices and make some adjustments to make sure that at least the tenant and yourself, you being the landlord, you are keeping that tenant happy, and obviously there has to be some discussion on the rental going forward. That is your own personal business. Obviously, you have to deal with that. So let's just assume negative interest rate environment. You're going to get practically near zero to having to pay the bank to keep your money with them. Okay, this is more or less going to happen, guys. It's more or less going to happen. If the banks are going to be kind enough, or certain banks are going to be kind enough where, okay, we will keep your money, but we cannot pay you any interest. We literally cannot pay you any interest. Okay, for a fixed deposit, maybe you get 0.1% for 12 months, that kind of stuff, right? It's gonna be horrible for savers. That's all I can say. Now, if you do not want to be in that situation, where do I park my money? So now, firstly, there are going to be stocks that are going to have nice dividend yield, meaning to say that if their revenue and overall profitability can still maintain their overall operating costs, they will still be able to pay out a dividend. But for the next 3 to 6 months, I clearly feel that these companies that have been very generous during the boom times, paying out a very nice healthy dividend, they are not going to be able to sustain that dividend because they need to survive as well. They need to start putting more cash into their pockets because they are going to have to restructure, going to have to keep their staff and keep talent in the company, and they cannot be so generous to potential investors. But having said that, there are going to be companies that will eventually want to restructure their debt. So that happens to be in the bond market. So bonds will be issued with probably a attractive interest payment, right? Of course, that will be dependent on what company, which company, what kind of credit rating they have, so on and so forth. There's going to be some work, guys. So I cannot be covering everything in this episode, but I want you to kind of put that as a seed in your head. At least you know, oh, okay, so there's going to be dividend yielding stocks and there are going to be corporate bonds. Now, what's a kind of good interest rate am I looking at? Now, there are companies that are having very generous 5 to even 6%, even up to 10% per annum in this market. Yes, in this market. Why? Because their stock prices and bond prices have fallen, so the yield is going up. So meaning to say that you will be able to enjoy more for buying either their corporate bond. So maybe, for example, they are selling their bond at 1-to-1, right? 1-to-1. But if you are buying them now, you're buying maybe 80 cents to even 70 cents up to 60 cents on the dollar. Okay? So that means for every 60 cents you pay, you are getting $1 worth of that bond. I think it's pretty good, right? So there are different maturities. There are also different kind of payouts and interest rate. This is something that you have to go and figure out and deal with. Now, obviously, all these things are discussed in Premier, right? Where we start sifting and going through the market. But before you even consider all this, I would really like to say, still focus on your job security and getting your finances in order before we start looking at opportunities. So if the first two are not taken care of, do not join, guys. Really don't join. I'm not even trying to do a reverse psychology because it doesn't work. And I am not in the position to teach you all these things, because right now I want to deliver information so that you can immediately go and execute. That means you have some level of knowledge already. You can already start joining. If you have already settled stage 1 and stage 2, job security and finances, come to me. Premier Group welcomes you. But if you're on stage 1 and stage 2 and emotionally you are now very concerned about your job security, your finances, you are concerned about your family's finances and their health, so on and so forth, I cannot help you. I really cannot, because I'm just that direct. Okay, so this is kind of like how the group is functioning at the moment, because we are moving forward, because we have been preparing for the past 2 years, guys. We've been building everything from crypto, and then we are moving our funds gradually and diversifying it across the space. This is how it's going to be like. So now the next thing is you can also look for growth, right? You can also consider growth. Growth is going to be there. It's just that it's not going to be immediately there for the next 2 to 3 years. I really feel that there are certain companies that are going to be flourishing. For example, Zoom Communications. Zoom Communications has been doing very, very well during this period of time. When I was looking at it on the 16th of March, it was $100. Now, obviously, during the ICO, it was way more attractive. But at the time, there were other free softwares available. For example, you have Skype, you have Google Hangouts. You know, like using Zoom wasn't really there. But the thing is, right now, a lot of companies are using Zoom. And with this current, and not only that, right now, because schools are being shut down, private tuition centers are shutting down. They are looking for ways to start to communicate and have online classes, online meetings, online conferences. So definitely, if you're still a company that is still profitable during this time, you're going to be upgrading that subscription. So I foresee for the next, like I said, this is not financial advice, this is just my personal opinion. The next 3 to 6 months will be awesome for Zoom Communications. Now, on the 16th of March, when I looked at Zoom Communications, it was about $100. Then after that, it went up to $159 and recently kind of corrected, because I think that it's already the end of the week. For at least the week, it kind of dropped a little bit below 150. Okay, so these are companies that still have growth. They are still going to enjoy growth during this period of time. Naturally, there are companies that are also in the medical field that are perhaps producing masks. They are likely on the brink of finding a vaccine for this period of time. These companies are going to be great as well. These are growth related and not dividend related. So in a way, you are still able to grow your wealth. Now, the next one that I want to kind of speak about is crypto. Crypto is very, very unique. Now, the uniqueness is, unfortunately, most of the time when you look at staking rewards within crypto, you're getting free tokens on top of a company or a network that isn't generating revenue as per se. It is just naturally transactions that are happening. But are these transactions profitable? Not really, because I think tokens at the end of the day need to be backed by something, right? If it's backed by revenue, that's fine. But if it's backed by just purely a promise, I would really stay away. This is the problem that I have for crypto. But for some reason, Bitcoin has been going up. Rather, it has been kind of going up. In fact, it didn't hit the lows. It hit the lows very momentarily at 3,800, but it bounced rather quickly back up to $5,000 and has held. Now, the question is, what kind of volatility are we going to get in the next 2, 3, 4 quarters, right? Or even what will happen after the halving? That's what everyone is curious about. Some people are bullish. The sentiment out there is that it's going to be long-term bearish but short-term bullish. So all these things are stuff that everyone has to deal with. Hence, that's why I'm saying when you're in that stage of you're going to be an investor, you have to be even a hybrid of a trader come investor. It is not easy, guys, because if you are someone who is emotionally triggered, right, you cannot think logically at this point of time because you need that job security or your finances are not in order. It's going to affect your trading and investing mentality. I guarantee that. This is the problem that I'm seeing at the moment. And a lot of people who have been even with me for more than a year are getting the jitters because this is kind of like the first time they're experiencing it, because these are people who were probably graduated, they never really went through the whole subprime like I did, right? I was literally born in that. I was literally born. My career as a banker was born in that scenario. I was handling all the shit at that time. So that's why, to me, right now when I look at it, I was like, okay, it is bad, but I know that economies always recover eventually. Now, a lot of doomsayers are saying, the economy is dead, the US dollar is fucked. In a way, it is like that. It is pretty shitty. I wouldn't deny. But when you look at the statistics, right, the coronavirus wasn't as bad as the H1N1. The coronavirus isn't as bad as Ebola. Okay, but obviously we are still early in the phase to kind of say how bad it is. We need to wait until the whole phase and we start seeing cases in each country start to drop, and that's when the death and the recovery and the death toll starts to go down. Okay, right now obviously Italy is very, very bad. It's very, very sad. It's very disheartening to watch the news that from initially it was 80 and above, right, that they will not provide medical assistance in the event that there is just too many people requiring medical assistance. Then they lowered it to 60 years old. That means anyone who is 60 and above could potentially not receive medical assistance in the event there's too many people that need a ventilator or need basically ICU attention. It's actually quite sad. And by the way, Italy has one of the best healthcare in the world, guys. This is something that I only recently came to know about, that Italy and France are actually up there in terms of healthcare and medical facilities and medical doctors. But Italy has one of the highest death tolls. So this is really a concern, guys. It's really, really very sad. So right now, I think the most important thing is to kind of have best practices. Social distancing. Don't go out into crowded spaces. Be healthy. So the next 3 to 6 months. So let's get back into the episode. The next 3 to 6 months is observation mode. You don't have to buy anything, guys, but at least you start looking out for what I mentioned. So back to it. Look out for high yielding or great dividend paying stocks. Okay, these are usually real estate investment trusts, or they are a company that is providing, usually banks, they are also able to provide dividends. But like I said, the revenue and the profits will not be there for at least or it won't be as good as the past few years. I guarantee that it will not. It will be a miracle if the company can still be willing to pay out from its coffers to its investors. It doesn't make sense to me, because if I'm a company right now, if I'm the company CEO, I want to make sure my company survives during this period. I will definitely be able to honor investors later. Investors are going to be secondary. But as long as my company survives, I am able to shelter the people who are employed in my company. I'm able to kind of hunker myself down and make sure that my company survives during the next 2 years. I will be fine. So cash is very important. Making sure that we maintain businesses are important. Continuously going out there, making sure that we are keeping our clients happy, giving them whatever they require during this period of time, any kind of assistance that we can. It is a mutual thing. Everybody has to help each other. That is kind of like how I would make sure that my company pulls through. The next thing is that if you are running a small, medium enterprise, you are a business that you are the only employee, you're the boss, you're handling the logistics, I think you're in a great spot to grow during this period of time. Don't stop giving great value while you grow yourself and grow your business. It may seem shitty, it may be hard to get sales, but I think people are going to make more money than they ever did during this period of time, and they're going to be able to make themselves known more than anyone else during this period of time. You'll be very surprised how many people have built their business during a bear market, and they just literally become multi-millionaires during the bull market. That is how success is created, through hard times, guys. Any monkey and their pet and their monkey brother can start a business in a bull market and do well, because at that time it's already established already. But if you're willing to put out content, if you're willing to market to your clients during this period of time when no one else is looking, and you provide more value than everyone else, that's why you are gonna be ahead of everyone else. While everyone is cowering and putting their heads in the sand like an ostrich, You are out there being like a lion on the hunt, on the prowl. That is what you need to do. All right. So these are the things that you kind of want to focus on. These are the things that you want to be looking out for. Improve yourself during this period of time, guys. This is really the best time. You don't want to waste time, even though you're on quarantine. You want to make sure that you order some self-improvement books. Try to think about other skill sets that you can focus on, just in case your job is at risk. You still need to provide for yourself or your family or your elderly parents. These are things that you need to think about, guys. Don't wait for it to happen and then you go and find the toilet paper. You know what I'm saying? So all these things, guys, just take note about what I have to say. If you have to rewatch the episode, go ahead. But like I said, guys, if you are someone who is ready, you're in already stage 3, stage 1, stage 2, you're already ready, you want to get into stage 3, the Premier Group is ready for you. Join us. The link is in the description below, and I'll see you in the next live stream. Take care, guys.